What will banks be doing in 2029? Of course, that presupposes the existence of banks, which I hope will be raised by our speakers. So we shouldn't prejudge anything. Our speakers are a very distinguished panel. Natalie Ceeney, who's the chair of Innovate Finance, ex-McKinsey. She has had an absolutely devastatingly wonderful career, and she's only, I guess, 1/3 of the way through it. Innovate Finance is I suppose, the trade association for the fintech industry in this country. It's the voice of global fintech, according to its website. I had a look at its website. Of the top team, which is made up of 9, there are 6 women, 3 men. Of the board, there are 5 women, 2 men. There is a diversity. Director of diversity. She's a woman, and I would suggest she's got a lot of work to do. So if you're a male and you want a job, Innovate Finance is the place. Sabrina del Prete, who is the founder of Core Labs, which is an IT consultancy set up only a couple of years ago in 2017, which is, after all, a generation ago in fintech. Justin Fitzpatrick, formerly of the University of North Carolina. I really like that because they're all 9'3" and play basketball in North Carolina. He is the co-founder and CEO of DueDil, which is a company devoted to finding information on other companies, but it has a very, very high-tech suite of competence and batting how can I put it, batting cleanup. No, that's, the order is, I apologize. Natalie gets to go first, Justin gets to go second, Sabrina gets to go third. This is girl, boy, and then batting cleanup is Nick Ogden, who recently founded the first new clearing bank in 250 years in this country, ClearBank. But he is one of the great entrepreneurs of the city. Before he founded ClearBank, he founded something called WorldPay, which he sold for a huge amount of money and has sold on several times since then. But even before WorldPay, he was responsible for something where I came into the tech sector called Berkeley Square. And that was one of the genuine early innovations of the tech era. So that's the running order. We have very little time. Nobody really gets to speak for more than sort of 5-7 minutes. I'm hoping that we'll have time for at least one question in between the speakers and that there will be time for a little bit of questions afterwards. But let me give you, first of all, Natalie Ceeney. Natalie.
Now, to echo what Andrew just said, when we talk about what banks will be doing in the future, we do really risk assuming that banking services will be assumed to be delivered by today's banks. And actually, if you look at some of the key trends, we can challenge some of that. So, trend 1, we've seen a huge disaggregation of traditional banking services over the past decade. Most people may have their bank account with the same bank they've banked for years, but now get their holiday currency through a specialist FX provider. They've got much of their debt through consumer credit, which might be with the retailer, and I could go on. And that disaggregation and shifting to consumers having multiple relationships is just going to increase, particularly as we see both fintechs and big tech offer solutions which are much more conveniently integrated into your lives, into your purchasing, into your browsing. And a recent Accenture report revealed that new competitors have already grabbed 14% of UK's banking revenue, and 63% of current financial services players didn't exist a decade ago. And regulation, of course, is going to support this. We've already seen the door opened by PSD2 and open banking. The Bank of England is seeking to open access to its balance sheet, to new payment providers, etc. Another big trend we're seeing is differentiation. It's been a really interesting factor of banking for many years that, well, it all kind of looks very much the same. And that's one big reason why consumers haven't switched. And that, again, is changing. So challenger banks and wider fintech players have shaken that up and started to offer truly differentiated offers. And those who are moving are attractive segments. So according to Census-wise, over 28% of high earners, over £75,000 a year UK money, are using challenger banks. And actually, it's even more true of business banking than retail banking, where over 20% of customers are using challenger banks now. Data. Now, I won't elaborate because we've just had a big session on data, but the reality is most banks haven't used data particularly effectively, particularly when compared with big tech. And that's changing. By 2029, data capability will need to be a core competence, not just For consumer reasons, we're not going to all fill in long forms for a mortgage application when, hey, our data is out there, but for the regulatory reasons described. And who's better at this? Big tech. And then we've got payments, where we've already seen some of the biggest shake-up of banking and where I think the biggest shake-up will continue. It's becoming increasingly clear that the wallet, rather than the underlying account, is going to be the consumer driver of choice. And look to China, where two non-banks, Tencent, Alipay, dominate the payments market, or Nordics to see the power of Swish. And we may also see new tokenized approaches to challenge fiat currencies as being mooted by Facebook's embryonic Libra. It's hard to see cards becoming the dominant form of payment in 2029. And with the Internet of Things, payment integration is only going to go one way, so it's not obvious that traditional banks are going to dominate payments. And the final trend, people are going to be left behind. Not just the old, but rural communities, those on lower incomes, those in poverty, those with disabilities, where traditional banking and this move towards digital payments just aren't bringing everyone with us. And we're seeing a big backlash, not just in the UK, but globally, with example in the UK, Labour, our opposition, now putting out political promises to turn the post office into the people's bank. So one of the other big things banking is going to have to address is how do we bring everyone with us? So quickly, what do I think the banking ecosystem will look like in 2029? One, the standard of banking services will have been driven up by fintech innovation. Anyone offering banking services will have standard tools to help you manage your money better, set up flags or blocks for risky behaviour like gambling or overspending, give you choices about the way you manage your money. Two, data management will become a core capability, for all the reasons we've discussed. Three, consumers will have multiple relationships. You won't talk about your bank. You will have multiple relationships. And banks will need to pick which part they compete in. And there'll be new battlegrounds emerging on what part of the customer journey add most value. Fourth, we'll see more utility and consumer services, perhaps jointly owned by banks or even nationalised, to look at bringing everyone with us. That might be about universal ATM services or cash being protected or utility services to protect rural communities. And fifth, many of the key players will not be today's incumbents. We'll be likely to see big tech taking an increasing role in payments, quasi-banking services, leveraging their retail or community relationships. And we're going to see new fintechs either dominating niche segments or partnering with incumbents to help them change more rapidly.
Okay, well, I have one question for you, because I know that recently you did you chaired a study, you produced a study on the future of cash, and that very much ties in with what you were saying about the, if you like, the bottom 20%, the people who really can't benefit from the changes in technology which have overwhelmed them over the last 20 or 30 years. How do you see cash as a means of payment going forward? Will it remain? Will it remain important? How will we manage to make it available to those who need it?
So in the UK today, 3 out of every 10 payments is now made in cash. In a decade's time, it will probably be down to 1 in 10. So Britain's got a choice. If we do nothing, we will have a lot of people who can't access cash, can't pay with cash. Shops will go cashless. Hey, not many customers use it. Haven't got a bank branch to pay it into, and our cash economy will disappear. The problem is that is going to leave millions of people behind. What a number of countries are starting to moot are universal cash infrastructures and universal service obligations, both looking at cash access and cash acceptance. That's the way I think the UK should go, looking at creating a cash infrastructure that costs the banks less but protects cash until we've solved some of the really big issues about a digital-only infrastructure, which Sweden, for example, is grappling with. So if you have a digital-only infrastructure, what do you do when you've been hacked? What do you do when the power goes down? What do you do when digital just for some reason doesn't work? And at the moment, cash is hugely resilient. What do you do when your money supplies has been spontaneously privatised because no one's using a fiat currency anymore? So there's some pretty big questions for the central banks to ask before they should allow us to sleepwalk into being cashless. One
question from the floor for our speaker. Anyone interested in this issue? This is a really crucial issue. Is there a question there? Somebody has his hand up there. Yeah. Could you just take the microphone?
Idrissa Kamara, Standard Chartered Bank, Sierra Leone. I'm particular more about the points around the rural sector or the poor with respect to they being left behind. And we've seen a trend in Africa where mobile money is actually taking the banks to the rural sector.
Yeah.
So what's your view with respect to that?
Yeah, and I mean, M-Pesa in Kenya is a fantastic example, and actually there's a lot of evidence it's driven up wealth. The problem in the UK is, actually what's happened in Africa is you've leapfrogged the fact that the banking sector didn't work for most people, and technology like digital money and M-Pesa have leapfrogged. In the UK, actually the poorest have something that works, but it's called cash. So the chance we're going to, in a way, say, move away from cash to this better thing, well, actually they've got something that works. So that's the challenge in the UK. And actually, M-Pesa is an interesting example because Vodafone was blocked from bringing it to the UK, which could have been a solution a decade ago. I think in the UK, the answer is protect cash. That's not the answer everywhere.
I do think that in Kenya, M-Pesa worked largely because the central bank didn't notice. When they tried to move to Nigeria, it got much trickier because the central bank noticed what was happening. Was there one other question over there? Yes. Okay, well, first, yeah.
Sorry, Peter Taylor, Commonwealth Bank of Australia. Just a question, Natalie. The incumbents, how many of them do you think will transform into the future and how many will get challenged out of the market?
Oh, it's a really, really good question.
Name names.
Honest answer at the moment is I don't know. But if they don't transform, the business model isn't going to work. And I think they're all grappling with it, with some very different ways of doing it, with some looking at setting up their own challenges and seeing if they work, some trying to transform from inside, which I think is very, very hard. Because culturally, a big bank has a completely different set of working than a fintech needs. And trying to transform from inside is hard. And I think they're all really facing the fact that if they don't change their business model, they won't be around. I don't know how many will survive. I don't know.
Alistair, one last question.
Hi, Alistair Tyler from the London Institute of Banking and Finance. Just a quick question about this move to a cashless society. We're already seeing lots of problems in terms of financial capability. So who's got the responsibility to address those issues?
That's one of the problems. At the moment, no one. So what was interesting when we looked at cash is there's no regulator that's in charge. It isn't really clear if anybody is in charge. We did see the government step in to form a joint group, bring the regulators together, but we haven't exactly really got a government at the moment, so that makes it a little bit challenging. Certainly when we look at things like digital inclusion, so look at payments inclusion. The biggest issue in the UK is 20% of the UK doesn't have a decent mobile signal. So how do you do mobile payments if you haven't got a mobile signal? How do you do strong authentication if you can't receive a text message? That's not something that Treasury and Financial Services can solve. That's an infrastructure issue. So actually, this is whole of government infrastructure territory, not just about banking. And we therefore need the government to own it.
Okay, Justin Fitzpatrick, how do you see the future, the next 10 years?
So I feel slightly awkward as the youngest person on this panel to be the one arguing that I think banks do have a future, incumbent banks do have a future, and they're probably going to be sticking around for a while longer. But so I took the question from a slightly different angle. The question, as worded, was what will banks be doing in 2029? And not trying to be a smartass, I hope they're doing banking because it's really important. The more interesting spin on that question for me is really how will they be doing it and what kind of changes are we likely to see over the next 10 years? And I think Natalie did a great job of talking about some of the some of the trends that have already been pushing their way through both fintechs and banks. So here's how I kind of break this down. When I think about where the change is likely to take place, I look at the pressures and where those pressures exist within the current model. And as far as I can tell, the pressures are really coming from three main places. There are pressures coming from customer expectations because we're increasingly porting our expectations as consumers of mobile apps and consumer services into the financial services world, into our experience as business owners. There's pressure from the regulators, and then there's pressure, as Natalie alluded to, on the underlying business model. So, each of these pressures is kind of, creating different tensions within the organization. So, where what's most likely to change, as these pressures exert themselves. One is the way that data and technology is used. And this is something that, my company has a lot of experience in. As Andrew was mentioning, we're a company intelligence platform. And so what we do is bring together billions of data points a day, authoritative data points on companies, directors, and shareholders. And we put these into a network or graph view. So just like LinkedIn owns the economic graph and Facebook owns a social graph, we're applying this notion of a graph to the world of company information. Once you have that highly contextualized view, you're not only able to understand more about the entity that you're looking at, whether that's a company director or an individual, but you're also able to tell a whole lot more about the context that they operate within. And so we're already seeing a number of fintechs and incumbents who are adopting, putting technology and data front and center in the way that they deliver their model to their customers. And they're generating some, the ones who are kind of venturing into this space are generating some really fantastic outcomes. So, one example that I can mention is a UK high street bank that we work with, where previously their process for opening bank accounts was largely manual, right? They had, and I'm talking business banking accounts here. It was a 4-week process. There were 15 pages of application forms involved, back and forth. Actually, when you look at what information is required and where it's required, a lot of that can be automated. And so the way that organizations make use of data and technology in order to deliver services that are both more cost-effective and also deliver better customer experience, I think is going to continue to be a major trend. Now, that has a knock-on impact on the role that people play in all of this. Undoubtedly, you aren't going to need as many people to deliver the same level of service across your customer base. So the question is, well, do the people get replaced by, the algorithm, or do they have a role? And I definitely see them having a role, but that role is going to change. So going back to one of the organizations we worked with, we saw that they were spending, their relationship managers were spending about a day a week, or up to a day and a half a week on average, manually inputting information, right? That's just a huge unnecessary cost, terrible customer experience, but there's also a huge opportunity cost attached to that, because that's time that they're not spending speaking with customers, forming better relationships, looking for upsell in the existing client base. And so, really the people in these organizations are going to have to really transition quite rapidly into the role of trusted advisor, because if you're a paper pusher, you're not really going to have much of a future. The other big area, I think, of change, which again Natalie touched on, is what's the relationship between the bank and other people in the ecosystem. And the challenger banks, have really, made this a feature of their model, where it's much more of a network of alliances rather than one organization that delivers your entire financial life to you. So I think that we'll continue to see a move towards specialization within particular business lines where partners are going to be delivering those services as part of a semi-open ecosystem. So when we look back 10 years from now, what has changed? What does this look like? We can take a couple different views on this. One is the customer view. And here I like to call this, kind of in a tongue-in-cheek way, the grumpy cat model, right? So from the customer's perspective, I think they're going to just expect that you're going to be there as a financial services provider when they need you, in the way that they need you, whether that's digital or in person, right? And there needs to be a certain level of adaptability there to deliver the service through the channel in the way that the customer wants. There's also the view from inside out. So how does the organization look like if you're sitting, how has it changed if you're sitting inside of it? And here we have to be thinking about moving towards this more open platform ecosystem style model where technology and data are underpinning and empowering the people within the organization to form these trusted relationships with the end customer. So, I think that while I'm very enthusiastic about, a lot of the work that many of the neobanks are doing, and I think that they're doing a great job delivering a digital service, the one thing that I would point out is that there's a big difference between being liked and being trusted. And although there are times where I don't like my bank, I trust them to fulfill their core responsibility, which is keeping my money safe. And so, there's still a ways for a lot of the challengers to go in terms of earning the same level of trust. And, at the end of the day, these relationships tend to be fairly sticky. So there's a lot of, this question in a kind of ecosystem model, well, who owns the customer, who owns the customer? I think that's actually a kind of old-fashioned way of asking the question. I think, the world that we're moving into, in the world of 2029, the question will be, who's really earned the customer? Because the customer is going to have choices. The customer is going to be able to access the products and services digitally or face-to-face. And, those alliances of partners, need to be brought in order to deliver something that's best in class.
So I think that's absolutely fascinating, because it seems to me that what you're saying is that the incumbent banks can get better at what they do, amongst other things, by hiring people like you, but they've a lot of, as it were, cleaning up that they can do to make themselves much, much more efficient. But at the same time, there is this possibility of what you call a semi-open ecosystem in which the neobanks, the challenger banks, operating perhaps on a hub and spoke system, can be more efficient.
Yeah, and so I absolutely agree that there is still the opportunity for the incumbents to change and embrace this new way of doing business. The biggest challenge, and we have people on this panel who are far more familiar with the inner workings of large banks than I am, but the biggest challenge is the culture, right? It's the people side of things, and whether you can kind of provide sufficient incentive and a clear enough vision to get people moving in the right direction with a sense of urgency, because there is urgency around this.
Of course, really. Does the future belong to Lloyd's or to Monzo? Who knows? One question for Justin. Yep, just to identify yourself, our microphone will rapidly move towards you.
Thank you. It's Alice Gaskell from Women in Banking and Finance. I wanted to, you raised the point of culture and trust, which is going to be key for all the successful banks in the future. Where does gender fit into that, and gender balance?
Yeah. Well, it's funny, because up until Andrew pointed out the numbers, I thought I had left the board of Innovate Finance because my term had ended. But look, I mean, in all seriousness, I think that we need to be striving for diverse teams and diverse perspectives, not because it's like butterfly collecting and we just need to have one of every one, but because actually there's real value in the tension that you get from people who have different views on things, and that could be gender, that could be ethnicity, that could be sexual orientation, that could be socioeconomic background. So
what you need is more old people.
Yeah, or old people, yeah. Yeah. I agree, and actually,
sorry, what was the question, please?
There is a huge increase in female wealth, actually.
Well, but also I think we actually did some work looking at this at DueDil, and it's on the back of things like the Rose Report, and actually if you just kind of look at it on that basis, women entrepreneurs make a lot of financial sense, and you can add hundreds of billions of GDP if you just increase the participation of female entrepreneurs in the economy. It's also interesting that when we looked at the gender balance of struck-off directors, men were 5 times as likely to be struck off as women. So, there is a an economic argument here as well.
I don't know if you want to come in.
We need the VCs to hear that, because the stats on VC funding for female entrepreneurs is utterly shocking. Yeah. I mean, over half of VC teams operating in the UK don't even have any women in the decision making, and women are 50% less likely to be successful to pitch. If they get the money, they're likely to make twice as much.
Okay, let's turn to a female entrepreneur, Sabrina del Prete.
So I wish I could say I was the youngest in the panel, like Justin said. Unfortunately, I stole my line. But I think I got an interesting perspective, because I spent 25 years in banking, all the way up to a position in the executive committee of a bank in the RBS group. So I got a very clear idea of what works, doesn't work in banking. And then I decided to move on the dark side and become a fintech entrepreneur. So now I feel how it is to operate in a world where effectively you are behind enemy lines but still working with incumbents. And Justin said a couple of things that I think are really important. So I mentioned culture is definitely, in my opinion, the biggest obstacle to anything changing. And he mentioned trust. And on that one, I slightly disagree, because I think it's absolutely true that we trust our bank. We trust our bank like we trust our dentist. It's the family dentist, we trust it, but we just don't like to go there. And the thing with the banks is that banks need to be careful about being complacent, because we trust a lot of other brands. We trust Apple, we trust BMW, we trust John Lewis, we trust Lufthansa. So when the main driver of business is trust, you are open to other organizations with trust coming into banking. And this, I think, is one of the key points that banks need to be careful about, because there's not only the obvious competition that comes from fintech or the Amazon of this world or the big tech companies, but there is the competition that comes from whoever has that very important currency, which is trust from the customer. So when I think of how I see with my experience in banking, if I think about my vision for banking in the future, I see three things. I think a complete invisible bank, and I'll explain what I mean. I see a very local bank, which seems to be going against it, but I'll explain what I mean. And then I see a bank full of empowered clients, empowered by data. For invisible, what I mean is we used to go into branch to ask for a product, and there is this idea that people still do that I need a loan, so I go into a bank, that I need a mortgage, I go into a bank. Sometimes we go to a bank digitally, so I'll go into the website of the bank because I want that product. And I think we're going to see that disappearing completely. I am buying something, and suddenly I get notified I can borrow money. I am an enterprise, and I use PayPal, and suddenly PayPal says, would you like a loan? By the way, PayPal has the best working capital facility I ever seen, and it's not a bank, but it's the best banking product. So this disintermediation, this difference between banking products and banks becomes more and more obvious if you think that the product will arrive at the point of sale. In 2029, maybe the biggest bank in the world is going to be Tesla. We don't know, but we like Tesla. WeChat is the biggest bank in China. Nobody understands. It's not very clear, but on WeChat you can make payments. You can pay all of your bills, you can borrow money, you can transfer money. It's not a bank, it does banking products. And I think we're going to go in that direction. The second type of bank and by the way, I think there is an opportunity here for incumbent. We shouldn't expect that the invisible bank will be led necessarily by other brands, non-financial services or fintech. I think banks need to move towards an invisible bank that is there with you, that works like a butler, that reminds you of things, that is personalized, that prods you, that reminds you when you need to do things. And I think that bank will win, because we're all fundamentally lazy. So we want something that is all around us, rather than us having to make an effort. So the local bank is something I am really interested and intrigued by because it has a lot to do with the way that we interact among people. Digital is very, is robots, it's stuff that we don't understand, happens somewhere there in the digital world. But actually, there are some good examples of local banks or local initiatives that are linked where people come together. I don't know if you ever heard of the Brixton Pound. That's not the Brexit pound, because the Brexit pound, I will stay away for a while. We don't know how that is going to go. But the Brixton pound is a cryptocurrency used in Brixton, created in Brixton, by the people from Brixton, for the people in Brixton, and they use it. And you can pay, and you can borrow, and you can lend, and you can invest. So that's an example of an invisible bank that has got the roots into a local project. And I think we'll see more and more of this because people come together and they have common values and things they want to do. And banking goes back to being what banking is there for, which is to empower people's lifestyles, not to sell products. The third point is about data. I think we all touched on data. I have a particular take on data. So the thing about data is, we had a speaker before that said, we own data, consumers own data. And my answer is so what? Because until when I can have a conversation with my bank and say, you have to give me a discount because you're using my data, that empowerment means absolutely nothing. I think we will get in 10 years in a situation where not only I own my data, but I have the power of using my data to ask for value. Not necessarily price, value against that. There is a wonderful technology company called DigiMe, and what they're doing, they're putting all your data in your phone, so you can see exactly everywhere where the data is, and then you can start negotiating. And I think as consumers, we'll get into the frame of mind, a little bit like when you go and you want to have your discount voucher, because I bought something for Ocado for 10 times, and now I expect a discount. I think when we'll get into a frame of mind where we'll start trading value for data. And again, I want to make a point, is value, is not price, because value has value components. And I think one of the speakers said that earlier, maybe we expect more than just money. So yeah, that's it. So I think for me, the bank is going to be invisible, it's going to be local, and it's going to be full of empowered clients who will require an exchange of value.
Okay, excellent. Digital and local. The Brixton pound has been around for a while. The Lewis pound was even earlier than that. We've had a lot of these local initiatives. Frankly, none of them has taken off. Do you really believe that localism is the future? I mean, you come from an Italian background. Italy is much more, shall we say, decentralized than the UK. The UK is a dreadfully centralized society. Can we do it in the UK? You have local banks which actually are stronger in Italy than some of the major banks.
Definitely. My vision is that we definitely do it because the world is changing. Our children are much wiser than we will ever be. And they're much more aware of the environment, of the local initiatives, of what's possible. And also, what's changing is that, I didn't want to speak about cryptocurrencies, and we don't want to go into there, but there will be more and more tools available to people that want to make an impact in their own community. So maybe for us, for our generation, community is not important, but you speak to a 14-year-old, you can see what the world is going to look like.
Let's hope you're right.
Just one point, because it's come up a few times now, this issue around trust and who we trust. And I liked Sabrina's analogy with the banks and the dentists. I'm going to probably use that one again. But the alternatives, if we think about the alternatives for a minute, technology companies have been mentioned a few times. And I'm sorry, but I just don't find technology companies as credible arbiters of trust, given the background that they have now. So, I think there's a credibility gap there for, yes, it's not to say that we won't see, Facebook and Google and all of these businesses getting into small parts of our financial lives, but, fully displacing a bank, I think, is a big leap from where they are now, precisely because of this issue around trust.
Questions?
If I can just, I agree on Justin. I don't like the large techs too. For me, the trust comes from more established brands that are not technology. You know, the John Lewis of this world. I will always trust John Lewis. You know, maybe or the BMW. BMW is a huge bank. We don't even realize they don't do only leasing. They have an entire banking infrastructure, and people just trust the brand. So I think if we always go back to why bank exists. Once we agree the bank exists to empower people's lifestyles, then everybody can do it. You know, lots of other non-financial services organizations could have that value as something to aspire to.
There was a question? Yep, there. Just identify yourself. The microphone will appear. Quickly.
Hi, Charlie Sorensen, Bearing Point. Do you really believe that banks exist to empower people's lifestyles? Because I think there are a number of brands out there, you've mentioned some of them, that empower my lifestyle. I think banks have a far deeper meaning, which I think Justin is talking to, that will hold weight for the next decade.
Completely. I think the banks that don't understand that they dare to empower people's lifestyle will be gone. So what I think is banks have, so that's when we spoke about the changing culture. You know, what do we mean for the changing culture? Is the bankers haven't got a clue exactly what they're supposed to do. You go into a bank and they say, we're here to sell mortgages. We're here to sell credit cards. If bankers don't change their perspective and they continue believing that they're here to provide a product, I think they have a very short lifespan. It was okay 100 years ago. Now you need to think differently. You really need to think about client centricity. You really need to think about, I'm here to help you as a client. Actually, you have to do it, you have to be authentic, because clients have got much more choice. They're much more savvy. They've got, like Justin says, very high expectations that are created outside banking. So that little game of, yeah, I know what I'm doing. I'm going to sell mortgages for the next 20 years and, I'm done. It's not going to work.
I think the only bank that we really trust is the bank of mum and dad. Nick Ogden, tell us what's really going to happen.
I don't have a clue. Apart from on my CV, it says accidental banker at some stage, which Mark Carney found interesting. Sometimes before you work out where you're going to go to, it's useful to look back and see where you came from. And if we look back sort of 25 years, a thing called the internet arrived. I was fortunate enough or stupid enough to build the world's first e-commerce shop back in 1994, purely because we had access to the internet. We had a Mosaic browser sitting here, and we had an X25 switch connected to Barclays Bank sitting here, and we thought with an interfaker, we could perhaps make them talk to each other and throw a transaction